Javier, ¿vas?
What I would like to ask is go back to the globalization theme, more towards the financial instability or potential financial instability, and in particular the outlook after the subprime crisis. So a little bit, what way do you see out of this crisis that seems never ending? And whether I know that from a central bank perspective, it's tough. I mean, it has been much more difficult. I think you've done a very good job, but it's a very tough job. Balancing a little bit the help with not creating moral hazard and incentive to take excessive risk, and whether you feel comfortable with the present frame of prudential regulation in Europe, the architecture of many supervisors and one money, whether do you think this is efficient on the face of more and more international transactions, banking transactions and pan-European institutions, and whether also in terms of the content of regulation, whether you think capital requirements should be amended somehow to account for off-balance sheet activities, as we have seen have created some issues and problems with the SIVs and conduits and so on. Thank you.
Thank you. Thank you very much. It is also a very, very important question. On the qualification of the situation which we are observing since several months, before August, because I would qualify the situation as an ongoing process of very significant market correction with episodes of turbulences and high level of volatility. But what we have to understand is that when I refer to the discussion we had amongst central bankers, and it certainly is the case in other constituencies, but among central bankers, long before this market correction, this significant market correction appeared to start, we were already saying, and we were saying that publicly ourselves, that we were diagnosing at the global level, in global finance, an underpricing of risks in general, which was substantiated by a low level of spreads, a low level of margins, an abnormally low level of risk premia, a low level of volatility, which, again, in our opinion, was signaling an underpricing of risks. And we were public, and I think it's something which we have to understand. The market correction in which we are is not, I would say, for the public authorities as well as for the private sector, a total surprise. What, of course, is or might be a surprise for a number of market participants and authorities is the channel through which that correction started. But the fact that a correction is ongoing is, again, something which corresponds to the previous diagnosis. So we are observing this correction. We had said ex ante that one had to be prepared for this correction to be as smooth and orderly as possible. I said that myself after meetings of the Global Economy meeting in Basel, reporting in a short press briefing on what we had discussed together among central bankers. And the idea was the private sector and market participants have to be aware of the fact that there will be, at a time, a market correction, and that we have to be prepared for that. It's a market correction which, again, is something which was perceived as probably unavoidable, probably necessary, and at the end of the process, I take it that we will be in a better position for a sustainable constellation of features in the global finance. But that doesn't mean that it is not turbulent, as I said, and as you very rightly say, doesn't mean that it doesn't call for all participant institutions and authorities, whether private or public, it is demanding. It is certainly a very demanding episode. As you know, we have a methodology to draw the lessons from what we are observing, because it's extremely important to draw all possible lessons from present situation. After all, it's the first test in real magnitude of the new global finance as it had moved progressively and developed and being more and more sophisticated over the last 5-10 years. So it's extremely important that we draw all lessons. We have asked the Financial Stability Forum at a global level to draw those lessons. We had a report on in the last meeting, international meeting that we had in Tokyo, and where the Europeans were present, and certainly the European Central Bank, we had a provisional report by the Financial Stability Forum, and we will have a definitive report on, again, lessons to be drawn in the occasion of the spring meetings of the international community in Washington. And we know already, and I take it that it's very important, that there should not be any prejudices. We should not put aside absolutely any authority, any market, any rules and regulations from this scrutiny. We must be as open as possible, because we know that we have to improve the functioning of global finance in a very significant fashion. To turn to the two last part of your question, prudential regulation in Europe has to be improved. And it is absolutely clear that already in a single market, we should have a total level playing field. There is absolutely no reason why regulations would not be the same in all countries that are making up Europe. After all, we have the same principle in Basel, in the Basel Committee, and we have the same directive in Europe. So it should be exactly the same implementation. And for a number of reasons, we have a decentralized set of authorities. I would say they have to be as intimately cooperating as possible in order for, again, in that single market, and particularly in the single market with a single currency, there would be no difference in terms of banking surveillance authority in the interface with the private sector on a country-to-country basis. A lot of progress have to be made, and the ECB's governing council is very strongly on that line. As regards the prudentials at a global level, as you know, Basel II is the present state-of-the-art concept for banking surveillance at a global level. We call for as rapid and expeditious implementation of Basel II. If Basel II is applied, we are in a universe which, from the standpoint of your own question, is better than if we are still in Basel I, in particular as regards the SIVs, conduits, and backup lines or credit line that are associated with it. Basel II asks for taking these lines in consideration in terms of capital requirements, which was not the case in Basel I. But we are fully open, it seems to me, at the level of the international community to consider also that Basel II being implemented, a permanent upgrading, of course, of rules and regulation in this domain is necessary, because, again, lessons have to be drawn from what we are observing. And nobody can say that any part or parcel of global finance presently is impeccable. Every part and parcel have to be improved.
Thank you.